ado, we're gonna review my trades today. So, I'm kind of just gonna raw dog this right now. It's kind of late. I was busy all day. I didn't really have time to come back and settle in and give a quality. Well, you know what? It's gonna be a quality video, man. I'm always gonna spit some game. So, yeah, let me get right into what I was looking at the beginning of the day. So, at the beginning of the day, we were here. It's 9:30 a.m. open, and we began trading in the first presentation. Now, as you guys know, I love trading the first present. Well, as you guys may want to know if you're watching this video, the first presentation is one of my favorite things to trade because it's pretty accurate. And what it basically is the first fair value gap at open. So if you trade ICT concepts, you should be familiar with the fair value gap. It's like the basis for his whole concepts and shit. But yeah, the first presentation is basically the first fair value gap at open. So yeah, that's what I was looking at when we opened, and that's what caught my eye here. And I also noticed that on the last trading session, we never filled that opening range gap. So I ended up dragging it over, and it was a pretty long opening range gap too. It was, oh shit, it wasn't really that long, but it was still a draw, you know? So it didn't end up getting filled there. So I brought it over here, dragged it, and that was my draw on liquidity because I knew price was going to want to rebalance this or fill it in before it does anything higher or it moves anywhere higher. So yeah, so seeing this at open, seeing this order block form, I wanted to get in here, but I couldn't get the fill because it never traded back into it. If I would have traded back into it, I would have shorted here, placed my stop at the high of this first presentation, and then went lower. Instead, I saw an opportunity to get in here, and I wasn't able to get in here because it had displaced. And let me show you on a 15-second chart what I was looking at here. Let's see, 9:30. So this is where I try to get in, right here, and price came and stopped me out. After it moved lower and displaced, I moved my stop to break even. I didn't have to. I should have just left it here and just let it move. But this was at like 50 bucks, and I'm only trading one micro right now, so 50 bucks is a good amount for me. And I seen it come 50 bucks. I didn't want to see it come back 50 bucks. So I ended up taking my stop here because usually if you move like $60 down and then you come back up another 60, that's a good indication that price is going to run in the opposite direction because 60 bucks worth of handles is not a lot. I mean it is a lot. It's a good amount. To be able to catch 60 bucks 60 bucks a day is some good money. So yeah, so 60 bucks down, 60 bucks up. I was like, let me move it to break even, protect my stop. And it eventually reacted to this fair value gap, as you can see right here, perfectly. The consequent encroachment of this fair value gap was respected perfectly on this move. And that indicated to me that this move was going to be going shorter, a lot heavy. So I re-entered short as we came under the consequent encroachment of the opening range gap that I told you guys about that I dragged from yesterday's session. And we brought it all the way down to here. So we ended up catching about 80 handles. And if you do the math, that's 150 bucks. Not bad. So our first loss, or our first trade, we lost 0. Next trade, we got 150 bucks. And I exited here. Look where the low of the day was. Less than 20 handles away from my entry. Or, I exited right here, so it's probably like 32 handles away. So yeah. So I exited here, which is very close to the low, and I tried to buy here. Because I saw this SMT forming. And I was on some crazy shit trying to buy like right away. Because I've done it before I was doing all this YouTube shit. I've done it before. But, yeah, I tried it and stopped me out ultimately. But we came back here and I thought about getting in here on the 15-second chart. But after this one, I was like, I had a good day. I'm gonna stop after this. 150 bucks. I'm done. We're good. We're chilling. We're solid, and there was no need to take more trades. So I just let it go and watch the market go. But I knew we were somewhere near the low, so this stop didn't surprise me too much. I thought it could come lower and still respect this SMT, and it did. And then we formed this order block, and then I got in here. Well, I didn't get in here, but this would have been a good entry. And look at it. My target was here if I was going to get filled. This would have been this was my target getting into this trade right here. This is my target. When I got in here, I was aiming to hit the high of the opening range, and it did. And look where it traded the whole day. Respected that, came back down, came back up here, and just consolidated in this range. And if you guys have been keeping up with my recent videos, I've been saying that price has been having these quick runs at open, and for the rest of the day we have this like consolidation. So that's why it's easy for me. Like in the morning, if I take 2 trades and I lose them, I'm good off that because I know I'm gonna be in here trying to catch a trade, especially if the morning run is super large. Like if the morning run is like something small, then yeah, I could expect a larger trade after that, or a larger range after that. But when we have this huge large range down, that's when I say like, nah, like I'm good off that, bro. I'm good off that. If I take 2 L's here, it's like I would still like be short. I'd still be in the right direction, but my position will stop me out, if that makes sense. So it's pretty much an entry thing. Like it's a bad entry, but yeah, keep an eye out. This is what I've been noticing in this market cycle. We have these huge runs down, and when we have these huge runs down, we end up consolidating. So without further ado, you guys have a blessed day. Take care and subscribe. Leave a like. Thank you.